All right. Good evening, everyone. Apologies, I'm a little late, a couple of minutes late. I'm in a hotel, I'm not at home. So I don't know whether this is going to work or not, but hopefully it does. So just hold tight with me. I'm hoping that the audio quality and the visual quality is going to be okay because on the hotel Wi-Fi, you're not supposed to be streaming in places like this. But anyway, we'll see how we get on. Yeah, there's a little bit of good news. It feels like 2 days in a row, more incentives, more things being announced to help first-time buyers get on the property ladder. And this one's been announced by Leeds Building Society. So yesterday we spoke about Skipton Building Society. That was all about 100% mortgages where you don't have to put a deposit in, but I go through like the pros and cons of it. It's great on the surface, but it's a really high rate, and there is a big risk of negative equity. So if property markets fall because you haven't got any equity, it's 100% mortgage, you could find yourself in the minus. The one today isn't along those lines. It's something a little bit more, I guess, normal, if you could call it that, and that's the fact that now your Netflix subscription and your Spotify subscription, things like your council tax, can now be used to improve your chances of being accepted for a mortgage. Now, I've advised on mortgages for a period of time, and it's always been a baffle to me why things like Netflix, uh, Spotify, your your bills, your subscriptions on a monthly basis that you have to pay contractually don't contribute to your credit score to give you a boost. It was always predicated on credit cards, personal loans, those kind of credit agreements, car finance. But this is a welcome bit of news. And what they're essentially doing is, let me just share my screen with you. Uh, this is going to be really, really back to front for me because I'm working on a much smaller screen. I normally have like my curve 55-inch screen. I'm working on my MacBook Pro here. But essentially, what they're going to be doing is they're going to be working alongside Experience. It says here, Leeds Building Society have teamed up with the credit score company Experian and will, from today, May 10th, factor in monthly costs like coffee shop memberships and streaming subscriptions when setting credit scores. The new move could help young people show they're financially responsible, which might help convince lenders considering a mortgage application. And I think within this conversation as well, there's a little bit of education to really get into as well. The whole point of having a decent credit. So credit scores and credit ratings are two different things. Your score is the number that you get out of a larger number. So for example, with Experian, they score out of 999. So obviously, the closer you are to 999, the better the score you've got. The better you are. I always treat your credit score as a report card. It's a report card on your finances, whether you're good at repaying the money that you owe via subscriptions now or credit cards, personal loans, car finance, that kind of stuff. It shows your track record. But the report card in itself isn't the main thing that the bank's going to be looking at. They're going to be paying attention more so to your credit rate, your credit card rating. So your actual report, right? So within the report, it demonstrates the behavior. So missed payments, late payments. It shows whether you have any defaults, any CCJs, any IVAs, which are involuntary arrangements, individual voluntary arrangements, any debt relief orders. Your report encapsulates all that information, and from a lender's point of view, that's what they're concerned about. Now, depending on what's within your report, it is reflected within the score. But when you go and apply for mortgage, it's important that you're paying attention to what's actually in your report versus the actual score. If your score is low, you should take it as an indication that maybe there's something in your report that you need to pay attention to. But I think this is going to be really, really good news. Experian does have something called their credit, I think is their credit boost or credit score boost, which kind of does something a little bit similar. And I'm surprised that this wasn't already included, to be honest. But I think the positive that we can take from this is that there are more lenders stepping up to try and help first-time buyers get the best chance possible, really, to be honest, on the mortgage applications moving forward. There aren't any downsides as I foresee it. There is no risk because you're not necessarily at this juncture yet where you're going to be effectively looking at mortgage rates, and mortgage risk. This is simply something to help you with the application, so you are successful in your application for said mortgage. So this is a welcome change, and hopefully, what we'll see is more companies coming forward with initiatives like this to help first-time buyers. But this was a really good piece of news today, followed by what we saw yesterday. Um, it is probably, as I say this, my mind is then kind of thinking of the opposite side, because there's always a yin and yang, right? I mean, this is by no means an excuse not to cancel subscriptions, or an excuse for you to go and get a ton of subscriptions, because now it could potentially help your your credit score. The reality is that if you're spending money on coffees, for example, and it's a good chunk of money, when you add it all up, that you could effectively save towards your deposit, then you've got to think responsibly from a financial point of view. If you're the kind of person who's spending 30, 40 quid a week, and you can do that on coffees, which is £120 a month, think about how that works out across a year. That's what £1,440 a year. That could be money that could go to your deposit. So don't use this as the excuse to just sign up to a ton of subscriptions. You have to be financially responsible still. So you still have to make sure that you're really, really stringent in terms of, look, if you're working towards your deposit, you're going to have to make sacrifices. Unfortunately, that's the reality. So you still need to be responsible. But if there are some that that you don't necessarily want to give up, and again, in my book yesterday, I kind of spoke in the live yesterday. I spoke a lot about my book, and in my book, I go through all these kind of principles and the thinking, right? So in the book, my formula is called the basic formula, and B is all about budgeting. And in my budgeting chapter, I talk about the fact that when you're working towards your goals, what happens is you earn money, and ideally, what you should be doing is siloing your expenses, right? So you have three distinct categories, is what I advocate. So you have your essential spend, which is the stuff you have to pay for: rent, mortgage, whatever, energy, credit card bills, those kind of things, right? You have to pay these things: council tax, water, gas, electric. Then you have your non-essentials, which will be, gym memberships, dining out, I don't know, anything that you enjoy, right? But within your non-essentials, what I do personally is I also prioritize my non-essentials. So for me, I give the example in the book that my audio membership for me is a non-negotiable, or an essential element of my non-essentials. So if I got to the point where I really, really needed to cut my expenses, yes, I'm going to start cutting for my non-essential expenditures, so gym membership, so on and so forth. But the way I've categorized my finances is that because I enjoy the cinema and that's my escape, I will not cut my audio membership until the very, very last minute. And that may be the same for you for gym memberships, Netflix, so on and so forth. The idea is that you only get two non-essentials within your non-essentials, or things that you absolutely will not cut. So if you have a long list of non-essential bills, you can't be like, okay, well, I've got 5 of them that are essentials, non-negotiables, I have to keep them. No, you only get 2. And that should hopefully instill discipline from a practical point of view. Let's not be around the bush. It's very, very hard saving for a deposit. It takes 8 years on average for people to save for a deposit for their first home if they're not using a 100% mortgage package like we spoke about yesterday. So be responsible with this. Really, really be responsible, because it is really, really important. And just, can I just say, things like buy now, pay later, be careful. Be very, very careful. I mean, that wouldn't be counted as a subscription. But please be careful with things like buy now, pay later, because psychologically what it does, and this is proven, which is why when you go onto all of these shopping sites, right, they have buy now, pay later, or some similar kind of scheme as a payment option. What it does psychologically is it gets you to spend more, because what you're looking at is what the monthly payments are going to be if you spread it across a few months, in opposed to the actual sum that you're spending. So you need to be alive to the fact that a lot of these retailers and all of these sites actually share a lot. They use psychology against you. and it's done very tactically, very subtly. You need to be alive to that, because those kind of habits can snowball, and those aren't good habits to have. Really, you should never be spending money on things that you can't afford or you don't have the money for. So just a word of warning there. Anyway, L has just joined. Right, let me have a look at this, L. 1 second. I've joined the peer circle. I haven't gotten an email. What do I do next? I'll have a look into it for you now, mate. I've been in meetings all day, so I'll go and have a look at it now. I should have an email in the subscription outlet. So what I'll do is I will drop you the invitation link to join the group. We've had 2 people join from yesterday, but the accountability group is a small group of people, essentially. We set goals every week. We hold each other accountable. We do this via WhatsApp, and then we meet up the first Saturday of every single month. So I'll do that for you once I've got off this live. The other thing I was going to mention very, very quickly, shameless plug, but hey, I've got to do it. If, again, you want to understand how credit scores actually work and what the banks are going to be looking at when you're applying for a mortgage, then you need to pay attention to the C part of my basic formula. It's a full chapter about credit scores, the difference between your credit score, your credit report, what information goes into it, how to improve it, how to challenge things that are on your credit report. So you might have, I don't know, missed a bill, right? Or I give an example in the book where years ago I canceled a phone contract, paid it up in full, but before the company had the chance to properly write it off, I'd cancelled the direct debit. And for some reason, there was a mispayment on my record. And I was able to put a challenge in with the credit reference agencies to be able to get that taken off. I explain what the process is in the book. So you can scan this code to go pick up a copy. It's also available as an audio book as well. You can listen to it, but I still think that having the physical book in front of you, I've actually got one here because I've been in the House of Commons today for a very important meeting. It's this book right here. Having the physical book will allow you to actually visibly see some of the physical exercises that I have put into the book. So, for example, this one at the very, very beginning of the book, this exercise right here is absolutely key, and you'll be able to visually see some other things as well that I put through the book as well. But you can pick this up. You can pick it up as an audio book if you wish to. Anyway, I want to make this one a quick one because the one yesterday went on for like an hour. And I've still got a ton of work that I need to do this evening to catch up with some of the things that I've missed during the day because I've been out and about. And the House of Commons was actually very interesting indeed, talking about financial education with some MPs. And it's nice to know that they actually received and listened to what we have to say in an open fashion. There wasn't really any pushback at all. I was very surprised. But there'll be more on that a bit later on. But thank you so much for watching this video. If you did enjoy it, please smash the like button. That will help with the YouTube algorithm. If you think that someone else might actually benefit from this, also just share it as well. And if you've not already subscribed to the channel, by all means, go subscribe. And again, pick up a copy of the book. The link will be in the description. Cheers, guys. Catch you in a bit.